All right. Very good afternoon, ladies and gentlemen, distinguished panelists, and esteemed participants. Good afternoon, and very warm welcome for today's webinar, jointly hosted by the East Africa Law Society and the Youth for Tax Justice Network. My name is Gabriel Achai, and I'm speaking to you live from the East Africa Law Society House in Arusha, Tanzania. Good afternoon, and a warm welcome to today's session, jointly hosted by our colleagues from YTJN. It is an absolute honor to open this important and timely discussion on curbing tax-motivated illicit financial flows to reduce reliance on foreign aid in Africa, and discussing in particular the role of lawyers. Let me begin by expressing our heartfelt gratitude to all of you for taking time to be with us here today, and especially to you, our speakers who have graciously accepted this invitation to share your expertise. As many of you are aware, Africa is currently grappling with the dual challenge of dwindling foreign aid and persistent financial hemorrhaging through illicit financial flows, most notably those motivated by tax avoidance and evasion. According to UNCTAD, the 2020 report, the continent loses approximately 88.6 billion every year to these flows, nearly 4% of its GDP. These losses are not abstract. They translate to shattered health clinics, stalled education programs, and unmet infrastructure needs across countries like Ethiopia, Kenya, Uganda, which are within the region. But this spreads as far as Nigeria and Somalia and many of our African partner states. And this, as we've seen in the recent months, the withdrawal of reduction of aid by major partners like US and UK amplifies the urgency of this matter. Now more than ever, Africa must turn inwards to mobilize its own domestic resources to build resilient systems and to take charge of its development narrative. Central to this effort are you, the legal professionals who interpret, draft, and uphold the rules that shape our economy. So today's discussion, ladies and gentlemen, is not just theoretical. It's practical, timely, and action-bound. It challenges each of us, particularly us in the younger generation of lawyers, to think critically about how we can contribute to dismantling systems and enable illicit flows, and instead foster transparency, accountability, and fairness in our financial ecosystems. So, ladies and gentlemen, with this, now I invite you all to fully participate in this very rich and thought-provoking session that is going to be moderated by my very good friend and brother, Mr. Stimwe Mukumya, Programs Officer at Youth for Tax Justice Network, a man who has given out passion, time, and stead to do research and grow in this area of tax justice. Mr. Mukumya, we are profoundly honored, exceedingly humbled to host you this afternoon, and you have us for the next 2 hours. So please blow us away.
Thank you very much, Gabriel. So welcome everyone. We start our webinar for curbing tax-motivated illicit financial flows to reduce reliance on foreign aid in Africa. And we are asking the pertinent question of what is the role of lawyers. To kickstart our discussion this afternoon, we have Ruth Mirembe, who is a research and teaching associate at the WU Transfer Pricing Center at the Institute of Austrian and International Tax Law. And this is at Vienna University of Economics and Business. She has a diverse experience in corporate legal and tax advisory and dispute resolution in Uganda. She's an advocate of the cause of judicature of Uganda and a member of the International Fiscal Association, IFA. Ruth holds an LLB from Makerere University, an LLM in taxation from the London School of Economics and Political Science, and is a doctoral candidate in business law, international taxation at the WU. So, Ruth, you're welcome to make your first presentation this afternoon. And over to you.
Okay, so good morning, good afternoon, and good evening from wherever you're watching us. And as we go into the discussion on illicit financial flows, of course, the first point would be to define what illicit financial flows are, which I might call IFFs, in the rest of this presentation. So about the definition, there's been a divergence of opinion on what IFFs are. And so right from the 1990s, there's World Bank literature that talks about illicit financial flows. At the time, the World Bank was mostly concerned with the capital flight from developing countries into developed nations. But right from that point up to today, there seems to be no agreed definition on what IFFs are, especially for the tax motivated IFFs. There is an agreement for most of the what we call the criminal IFFs, but with the tax related ones, there seems to be no agreement, and this relates especially to tax avoidance. And we might all know that tax avoidance is legal. There is nothing stopping any taxpayer from organizing their transactions in such a way that they reduce their tax liability. But in many cases, the line between tax avoidance, aggressive tax planning, and evasion is very thin. And there might, in many cases, the laws may not have clear definitions of what these are, so we rely on cases for those of us from common law countries, and that is not always clear. And for the World Bank, they have looked at IFFs that, well, the starting point is that there should be some element of illegality for something to qualify as an illicit financial flow. But then civil society argues that the definition should be much broader so that aggressive practices are included, because these contribute to a significant loss of they contribute to significant capital flight from African countries. So UNCTAD and UNODC task force came up with a sort of core elements that can be used to define an illicit financial flow. And these are that it's illicit in origin, in transfer, or use. So if at any point during the origin or transfer or use there's something illicit, then it can qualify for as an illicit financial flow. And also that it's an exchange of value. There were discussions about value that goes beyond monetary benefits. So even when something is not considered monetary, but if it is of any value to a country, then it might qualify. And also that there's a cross-border element in the definition. So what I would say right now, we would, according to UNCTAD and UNODC, you define illicit financial flows as a cross-border exchanges of value, which are illegally earned, transferred, or used. And I'll just go into a few examples for what could be if something was illegally earned. Common examples, I think, as a Ugandan, I've seen this quite a lot, and it might be the case for for the rest of the East African countries. Human trafficking, including organ trade, especially to a region I'll not mention here, but it has been a common occurrence in the past few years. So there's illegal trade in cultural artifacts. You'll find that for African countries, there are a lot of cultural artifacts that are present in Western capitals or maybe someone's private collection, but this is something that's of value to a lot of the communities where these artifacts originated. And then we have illegal natural resources extraction, illegal wildlife trade. So even I think Ugandans will see this. we have a special court that's dedicated to that in Uganda, and we see a lot of maybe porcupines or, well, very many. Some of you might have engaged with these cases. So that's considered in terms of origin. If you have something like that, it originated from something illegal. So because the law forbids most of these practices, so that would be an illicit financial flow. And then in terms of the transfers, we might have tax evasion. We might have aggressive tax avoidance. As I mentioned earlier, the line between what's legal and illegal might be very thin. So now what the literature is saying, if it's beyond uh, what you would consider the normal tax planning. But again, that's also not, there is no consensus in literature. So that's work for us lawyers moving forward. We need, in order to have guidance on these aspects, we need to go into further definitions on what should be illegal and what should be illegal. At what point do we have legal tax planning, and what point does it become aggressive, so much so to amount to an illicit financial flow? Then we have transfer pricing. In this case, we're calling it mispricing. And transfer pricing is essentially the process of determining the price of goods and services exchanged between related entities. And right now we know that the significant percentage of international trade is between multinational entities. So if you have a transaction between, let's say, Uganda and let's say Austria, where I am currently, and there's a mispricing of a product, then of course that's going to lead to a lower tax base in Uganda, and that is an issue. And then we also have money laundering, when proceeds of crime are then put into something to make it seem legal. And then in terms of the use, we have certain, if anything is used for particular practices, then it could be an illicit financial flow, irrespective of the origin. If money, let's say, came from very legitimate trade, but it's used for corruption, for bribery, then that's an illicit financial flow. If funding military coups, funding armed groups and things like that, those are illicit financial flows. And why are we discussing IFFs? So a part of the Sustainable Development Goals, out of the 17, there is SDG 16, which looks at promoting peaceful and inclusive societies for sustainable development, providing access to justice for all, and then building effective, accountable, and inclusive institutions at all levels. Specifically, Target 4 of SDG 16 says that the goal is to significantly reduce illicit financial flows, financial and arms flows, strengthen the recovery and return of stolen assets, and combat all forms of organized crime. So because of this, we have seen an increased focus on IFFs in the literature. And then the other thing is the BEPS project. When the BEPS project started that was 2012, BEPS erosion and profit shifting, because the aim was at reducing opportunities for taxpayers to reduce the taxable bases in various countries. BEPS was global, so not only developing countries, but it has an impact on African countries. So this project brought to light what different multinationals do to reduce their tax liability in countries. And so that's why right now we are also talking about that. And why is it important to combat illicit financial flows? Of course, the obvious reason that Gabriel pointed to in his introduction, the fact that between $50 to $88.6 billion annually is lost from Africa because of illicit financial flows. And of course, this reduces the resources that are available for public goods in African countries. But also we have a reduction in human resource. So if there's trafficking of individuals to whatever country, then these individuals are not available for the development of African countries. So that is an issue. Or even if they come back because illegal organ donation or something like that, then they're not healthy. So that's a problem. And political instability, very obvious. If you're funding coups or any kind of instability, then of course you're affecting the political stability of many countries. And then it's also important because generally, where you have illicit financial flows, you're going to undermine the trust in public institutions. So, for example, now that we're talking about tax, if there are taxpayers that are considered not to pay their fair share of taxes, then everyone does not want to pay their taxes, because if X and Y is not paying, why should Z pay? And that is an issue because tax is one of the major ways through which governments are able to get funds and then fund public goods. So if we can close the gap and then governments are able to earn more from what is lost, then that will be better for our countries. And I hand over to Asimwe, and if there are any questions, I'll be glad to take them a little later.
Thank you very much, Rose. Thank you so much. What interested me mostly is a statement that says losing money through IFFs causes reduced amounts available for development in the economies where the money is being lost. Thank you so much. So if we can close that gap, we get more time and more funds available for development purposes. Our dear attendees, I wanted to request you shortly to follow this link in the chat to give your feedback about this webinar. If you also have any questions, please also post them in the chat. They will be addressed later. At this juncture, we are going to move on to our second presenter. Being Mr. Rangarai Shikova. I hope I pronounced it right. So, a few points about Mr. Shikova. Yes. Mr. Rangarai Shikova is the Economic Governance Officer with PALU, Pan-African Lawyers Union, and Rule of Law Portfolio. His responsibilities focus on program planning, coordination, reporting, policy research, and analysis for the economic governance team. He holds an honors degree in public administration from the University of Zimbabwe, a master's degree in governance and public policy from the University of Passau, Germany. Mr. Shikova is also a fellow at the African Good Governance Network, which is a group of highly educated academics and practitioners dedicated to good governance principles. Prior to joining PALU, Mr. Shikova has worked for the Zimbabwean Coalition on Debt and Development as the program officer, and the African Forum and Network of Debt and Development, AFRODAD, as the domestic resources mobilization lead, where he acquired a vast experience and knowledge in policy advocacy and influence. His areas of interest are mineral resources governance, illicit financial flows, and tax justice. Over the years, Ranga has produced several publications and blog articles in the above-mentioned topics. So, Mr. Shikova, we are happy to have you. Please, you can take over from here. Thank you.
Okay, thanks, Asimwe, and hello, everyone. I'm joining you from Harare, Zimbabwe. So, picking up from what the previous presenter has said, there are some important points that I need to highlight, actually. So the first one is to understand that illicit financial flows are large in Africa and they are on the rise. If you look at the high-level panel report on illicit financial flows, it unraveled that the continent is losing 50 billion through illicit financial flows. But if you look at the UNCTAD report, it shows that illicit financial flows have increased, as it gives a figure of 89 billion. It's important to understand that the major sources of illicit financial flows are in the commercial sector. And this is one of the most sectors that is least understood because of its complexity. The focus on tax is because most of these tax evasion, tax avoidance, they happen through commercial transactions. And that's why it is the commercial component that is more important when it comes to issues of illicit financial flows. And according to the high-level panel report, the commercial component, it contributes to 65% of all illicit financial flows. And this happens through various mechanisms such as transfer pricing, tax evasion, aggressive tax avoidance, trade misinvoicing, etc. But it's also important to highlight that the rise of illicit financial flows is in all these forms, even in criminal activities, corruption, etc. Then it's important to also to highlight that the extractive sector is the highest emitter of illicit financial flows. And this is one of the main findings of the high-level panel report on illicit financial flows. So when we see our countries, mining, exporting these minerals, then we need to know that there is a lot that is happening there, trade mispricing, trade misinvoicing, etc. So when it comes to combating illicit financial flows, I think it's important to understand the sectors that are more vulnerable to illicit financial flows. And then due to the developments, technological developments that are happening, etc., in trade, etc., we are seeing that there are new and innovative means of generating illicit financial flows. For example, when we are talking about trade, we have seen that over the last 50 years, the balance sheets of many companies, they've shifted from being anchored on tangible goods to intangible goods. So it's really difficult to measure some of these intangible goods. And most of the companies that provide these intangible goods, they are located in tax havens. So I think we all know what happens in tax havens. And also the other issue is the issue of price manipulations, etc. For example, if we take China, like for instance, they can give you different prices for the same product. And some of these, it's because they give you these different prices because one, there might be different qualities for the same product, or the prices can be manipulated. So if we don't understand how the market works, how pricing works, I think it opens, a lot of, opportunities for illicit financial flows. Then what is being done to curb illicit financial flows? So the first point that I want to make is the issue of political will. As much as issues of illicit financial flows may seem financial, they seem technical, but it's important to understand illicit financial flows. They are also political in nature. So to get things moving, we need the political will. For us to have laws, policies, etc., we need the political will. We need politicians to be able to ensure that there are laws and policies that are geared towards combating illicit financial flows. And then now coming to the technical bit, I think companies, they need to register for tax purposes. This is to ensure that all corporations, whether big or small, they're registered for tax purposes. In addition to existing registration requirements, countries may also consider a provision in the respective acts regulating the registration of companies or small business to the effect that no registration shall take place without a proof of tax registration. So it's important that countries, they tax multinational corporations. Tax is really important when it comes to development because one, it is the most sustainable way of funding our development. And secondly, it is the most predictable way as compared to aid. I think we have seen the recent developments, America and other countries, cutting aid to Africa. I think we've seen that this is not sustainable and it's unpredictable. Countries can also establish transfer pricing units. This will ensure that when related parties are trading, they trade without the influence that they do have a relationship. They use global prices rather than, underpricing or overpricing. I think it's also important for countries to review double taxation agreements. I think we have seen that some of the double taxation agreements that our countries have entered into, they are unfair and balanced. So it's important that countries, they review these double taxation agreements. And we have seen countries such as Zambia reviewing their double taxation agreements. So given that most of the illicit financial flows, they emanate from the extractive sector, it's important to ensure that we improve the governance of our natural resources. At the continental level, we do have the Africa Mining Vision. It's important that countries implement and domesticate this vision so that we minimize the losses from the extractive sector. Then it's also important to enhance regional and international cooperation. And I think we have seen what is happening at the UN, where African countries have pushed, for the UN tax convention. This is important because the UN tax convention, it provides, an opportunity for countries to discuss on tax rules on an equal footing, unlike a situation where tax rules were made by just a few countries and the rules were also not in favor of African countries. So having a conversation at the UN where everyone has an equal say, where African countries can also take part in establishing tax rules. This would enable countries to address issues that we're discussing about, that is tax evasion, tax avoidance, etc. Countries have provided tax incentives in the name of attracting investments, but we have seen that some of these incentives, they have not been beneficial to African countries. Some have costed a lot of resources, financial resources, So I think it's important for countries to have a cost-benefit analysis on these tax holidays. And what is worrisome is the fact that some of these, beneficiaries of these incentives, they do manipulate these benefits so that they continuously, continue to benefit from enjoying these tax breaks. So it's important to also have sort of caps to say if an investor has benefited, then it means if they come again, they should not benefit. And in this scenario, we can see that it's important to have beneficial ownership, because when we have beneficial ownership, we're able to know that who is really behind those countries. The companies that have benefited. So if it's the same beneficiary in a different name, then we're able to know that they've already benefited from the tax holidays. And that way we can try to reduce some tax abuses. Then it's also important to strengthen tax administration and capacity. We are in the technological era, so it's important that our tax administrators, they do invest in modern tax systems, that is for filing, for customs, for auditing, etc. Technology is really important because it helps in minimizing illicit financial flows, that is through investigating crimes, monitoring real-time payments, screening and flagging out suspicious transactions, identifying illicit sources, etc. And it's also important that the tax administrators, they are also given adequate training to understand the technology and the way in which illicit financial flows are manifesting themselves. We have seen institutions such as ATAF doing well on this, way they train tax administrators from the African continent. But we do have other stakeholders who are important when it comes to combating illicit financial flows. We have organizations such as TGNA, they have the UPNIFT, which is a grouping of parliamentarians, and these are the people who make laws in your national countries. So it's important that they are given the capacity to want to understand illicit financial flows, how they manifest themselves, etc., the implications of illicit financial flows on development, etc. Once they have that understanding, I think they can then make laws from a point of knowledge. Then, of course, beneficial ownership, I think I've touched on this. Then, does combating illicit financial flows reduce reliance on aid? I think we have seen that most of the donor countries have cut aid on the African continent. And this is a wake-up call to us. What this means is that we need to focus inward. That is, we need to focus on domestic resources mobilization. The amount that we are receiving as official development assistance is actually less than the amount that we are losing through illicit financial flows. So in 2023, the African continent has received approximately 61 billion through official development assistance. And we are saying that we are losing 86 billion through illicit financial flows. So in my view, if we manage to curb illicit financial flows, yes, we are able to reduce reliance on illicit financial flows, because we will have more resources that we can invest, in vital sectors like education, health, infrastructure, etc. And when governments have access to more domestic funds, they can better finance their own development initiatives, and this can reduce, reliance on aid. Aid is not sustainable, and it's unpredictable. And I think what has happened, it's just a testament to all what I'm saying. And sometimes this aid, it comes with a lot of conditionalities. So I think once we combat illicit financial flows, we are able, in a position to have more resources for our own development. But we also need to understand that there are some important caveats to this, because one, combating illicit financial flows is complex, and it's politically sensitive. So it requires strong governance, transparency, international cooperation, to ensure that we combat illicit financial flows. And secondly, it takes time to combat illicit financial flows. For example, reforming the tax systems, the legal frameworks, enforcement, etc. These things, they don't just happen overnight. So it's important to take into account all these things. And there are certain conditions that need to be made so that we can actually benefit from combating illicit financial flows and not rely on it. For example, we need to ensure that there is no corruption, because you find that sometimes we might be able to combat these illicit financial flows, but when loopholes still exist, like in other sectors, then you will find out that that money, might not be used, for example, say, for the specific purposes it's supposed to be used. Maybe it will end up, being in the pockets of a few individuals. And I also think that as African countries, we need to have clear investment plans. We need to invest in sectors that have a multiplier effect, and in sectors that generate more income. For example, we need to revamp our industry, that is industrialization, rather than investing in sectors that are consumptive. But however, we also need to, to ensure that there is a balance, between investments in sectors that generate income and also consumptive sectors. I mean, we all know that that's how our governments function. I think I'll stop here. Thanks.
Thank you very much. Thank you very much, Mr. Chikova. What I found, sorry, what I found interesting in the discussion was the points out of the fact that it is not easy to combat these AFFs and we need political will to achieve this goal. And but what you pointed out that is I find it very promising is that what the African countries get through ODA, which is official development assistance, is less than what the African countries lose through IFFs. So if we can reduce the IFFs, we can actually fund our own development programs and not need to rely on ODA. So to take us in the next, as I want to point out to the other attendees, is please put any questions that you have on the chat. Okay, and also there's a link on the chat to get your feedback about this webinar. Let me hand over now to our third presenter. Shortly after introducing him, our third presenter will be Mr. Francis Kairu, who is a legal professional focusing on tax, illicit financial flows, international financial and taxation frameworks, financial and economic transgressions, corporate transparency, and beneficial ownership. He is presently serving as a policy of TGNA. With a deep commitment to instigating transformative shifts in the pivotal sectors, he excels in driving policy and legislative reforms that lay the foundation for enduring change. His extensive experience includes collaborations with the government bodies, civil society entities, regional and international institutions, media entities, and communities. His adaptiveness lies in both technical capabilities to effectively address emerging multifaceted policy challenges at national and global regional level. Francis Kairu is the holder of a Bachelor in LLB and a Master's degree in law. Kairu, let me hand over to you as you take us through our next presentation. Thank you so much.
Thank you, Asimwe. Please confirm that you can hear me.
Yes, I can hear you.
Good, thank you. And thank you to my fellow panelists, Ranga, my friend, and Ruth. Thanks for the presentations. I will therefore, I have also taken note of the things that they have spoken about so that I don't repeat unnecessarily. I'm going to be talking about the challenges and I think to just build on what colleagues have mentioned, one important issue that we have had over the years is what we can call a mischaracterization of what IFFs are. And I am sharing here what we can call a chart that shows what for a long time we have considered as a big problem across Africa. If you look at my chart here, you will see what I'm calling the old view of what our issues are, has been that our biggest concern across Africa should be, abuse of power, laundering proceeds of crime. And we have over the years invested heavily. We have invested heavily in, within our police force. We have anti-corruption agencies, across most of African countries. We have laws that, seek to tackle corruption. We even have a specialized anti-corruption courts. We have had a heavy emphasis on, what we would consider, corruption. And this has led us to not really characterizing the biggest concerns that we have, which I've put at the bottom here, which relate to what corporates are doing across our continent, and the effect that it is having on our economy. And therefore, for a long time, we have had an overall emphasis on what we consider illegal, instead of really seeing what we can consider illicit, which really are activities that we can consider not illegal. So maybe the law does not prescribe them as illegal. Maybe the law does not even criminalize them. We also have activities that are actually being facilitated by professionals, whether it is accountants, whether it is the lawyers, and we consider those, normal for business. And this mischaracterization of the problem has led us to overemphasize on what we can consider the small animal in the room, while assuming that we will have our problems solved while closing our eyes to the biggest animal in the room. And therefore, this has led to us passing laws, having specialized institutions, having specialized officers. Even our media is, fully awash, with what we see as our biggest problem. But indeed, as my colleague Ranga has mentioned, it would be good to actually look at what really comprises how much money we lose out of our continent. Ranga has mentioned that indeed what we should be considering is the impact that commercial activities are having on how much money we are losing out of Africa. What we consider corruption and the money that our officials are daily stealing from us is currently constituting about 5%. And then criminal activities, which include what Ruth had mentioned, like the trafficking of wildlife trophies, constitutes about 30%. Criminal activities also include, the illegal trade in drugs. And then commercial activities, 65%. This is the amount that we are losing through tax avoidance, tax evasion, and generally the activities of multinationals and other registered enterprises. So if you look at the composition of the amount of money that we are losing, and Ruth did describe what we can consider as illicit financial flows, then I dare ask you, colleagues, where should our focus be? Should it be on the 5% or should it be on the 65%? We need resources. We need to recover resources. We need to be able to finance our own development. We need to be able to finance the provision of basic services across the continent. We need to increase the amount of resources available, in our basket. We need to reduce our over-reliance on debt and aid. Where is the money? Is it in the 5% or the 65%? What do we do about all this? I think it's very clear that our focus needs to be, where we are losing the most, even as we also consider not opening the doors on the 5%. I know there has also been the argument about the impact that corruption has on weakening systems, which is also very systemic. So it's not just about the money lost, but it's also about the systems that are weakened, leading to even more losses. But I think as we look at where we need to put more efforts, and also think about, we have been naturalized, we have been trained that indeed our biggest governance challenge is the 5%. Is that where we are supposed to be focusing more efforts on? Myself and colleagues within the tax justice movement, as well as those that are working on debt across Africa, have been pushing that we need to pay more effort to where we are losing the most. Indeed, we also need to ensure that our institutions that could help us with the 65% are doing what they could. Our asset recovery agencies, our anti-money laundering agencies, our revenue authorities. And if you look at the budgets that we, for example, dedicate to, AML, asset recovery, our revenue authorities, compare that with the amount that we are dedicating to other institutions, you will see clear disparities. And I think the mischaracterization of the problem has led us to where we are now. Challenge number 2. Ranga has spoken about, the need to think about the technical capacity of the officials that we deploy to actually handle the problem of IFFs. It is important to point out that the typology of what we would consider IFFs, it differs. It differs at the international level. It also differs at the country level. So if you look at countries, for example, in the southern part of Africa, you will see that there's a lot of mining, and therefore, when you want to consider anti-IFF measures, you think about how do we tackle IFFs that are related to the exploitation of minerals. And then when you come to other countries that have a big commercial sector, then you start seeing the typology starts changing. And therefore, the ability to have technical capacity that is fit for purpose to address the typology of IFFs at that particular country level is very key. But it's also about the specialized officials that we have that are working on anti-IFFs. We will speak a little bit more about that as we go down. And it's not just the availability of these officials. It's also about the technology that is required to put us at par with what other countries, not just the other countries, but what those that are taking the resources from us are doing. You will know that most multinationals have, within them or available to them, some of the best tax professionals. They also have, the best professionals to guide them in terms of structuring. You know that they will also have the best in terms of, data analysis, data crunching, where to even situate their data relating to sales, relating to profit. And do we have equivalent technological capacity within our governments? I would leave that as a question for all of us. Do we have sufficient technological capacity to do proper data collection on, for example, all the trade that is happening in our country, things like customs data, the ability, for example, to do proper customs assessment for the goods that are coming through our ports, and the ability to do proper analysis for that, the technology to be able to have comparative data so that we are not just reliant on the declared value of goods for purposes of doing, an assessment for how much customs duty is due to the government. Consider that, we are dealing with multiple entities. We are dealing with entities that are also trading with each other all the time. We are also dealing with entities that are adept at hiding the data that could lead to bigger tax assessments. On the side of government, then we need much bigger capacity. So it's not just a human capacity issue. It's also about the technology. It's also the amount of investment we make in terms of our data processing capacity. But it's also, on the flip side, an analysis of, the deployment problems that we have across our countries. So sometimes we have the capacity available, but we deploy it in the wrong place. So you find excellent officials that could be serving in the revenue authorities, but they're serving in the Ministry of Finance, for example. You find excellent officials that could be in the customs department, but they are probably serving elsewhere. You find excellent officials that could bolster our ICT capacities within government, but they're working elsewhere, somewhere in the field out there. So it's also about how we manage the human resources that we have, but also, and this happens to most countries, is that the capacity is, for example, available in that country, but they're working for the competition. So they will probably be working for the audit institution or the tax consultancy, and maybe they were trained within government, worked there for 3-4 years, then left and are now working for the competition. Let's also speak about another challenge, and it is how, as a continent, we do not have proper coordination and cooperation in the fight against IFS. You know very well, colleagues, that we are a divided continent. We are divided by language. We even have names we have given ourselves, either Francophone, Lusophone, or Anglophone. We still uphold, the borders imposed on us. We even impose visas on each other. Say for you to go from one country to the other, you need a visa. We have not traditionally even prioritized cooperation on tax matters as a continent. I know at a regional level, especially where one country is reliant on another, you will have a very good degree of tax cooperation. For example, because of access to the port, you will see that, for example, Kenya, Uganda, Tanzania, South Sudan, because they have these port of entry collaborations, then they will have better harmonization on their customs regime, for example. But in terms of the broader picture of how we are cooperating, as Africa on matters of tax, you know very well that we are struggling, and it's not just within tax, but it's on all matters. It's on matters of security. It's on matters of the digital penetration across the continent, and this becomes even more crucial when you think about the value of information for tax purposes when it is shared between countries. As you know very well, countries need to be able to liaise, work with each other, exchange information for tax purposes, so that they can be able to, for example, curb tax evasion, be able to reduce the exploitation of their tax systems. And that cannot be done if countries are not working in concert with each other. And therefore, to the extent that we can improve coordination and cooperation on tax matters across the continent, we will be able to address some of the biggest IFF's challenges that we see across the continent. And that was at a macro level. At the micro level, it's the interagency cooperation, the lack of it at country level. For the ability of countries to tackle IFFs, they need better interagency cooperation. And this is across different agencies. So, for example, with the revenue authority within a country, being able to coordinate better with the business registration service so that they can be able to identify the businesses that are registered in that country. But there is also the need for those agencies to, for example, cooperate with the anti-money laundering agency. They need to exchange information. They need to have a multi-agency approach. They need to be able to, for example, share intelligence, about investigations that are ongoing. And to the extent that at a country level, agencies can be able to work better together, they can be able to improve on how they are tackling IFFs. And the cooperation should not just be ad hoc. The ability to have a structured approach, consistent meetings, the ability to even have exchange of information platforms, where countries can, for example, have platforms where if an agency is looking for certain information, for example, being able to access the national register, to be able to verify the identity of an individual. They should not need, if it's an agency of government, they should not need to, write, a request for information for something that should be very basic, where agencies should be able to share that kind of information, or the ability to, for example, verify documents that are presented. So when you present your identity document to a particular agency, and that agency needs to verify, is this identity document legit? It should be easy, straightforward on a platform without the need for one agency writing to another to get that information. but it's also about how countries work together to do what we would consider a coordinated national risk assessment, or even risk profiling, being able to identify, is it within the copper sector that we are seeing most of the tax evasion, or is it within the diamond sector, or is it within, for example, the trade in a certain material, or being able to conduct a coordinated risk profiling at a national level remains very key. Another challenge that we can talk about is, what we are seeing across the continent, what we can call the fallacy of FDI, or foreign direct investments. We have, we are operating under a lie that a country will not grow if it does not consider itself open for business. And what we are calling open for business is deregularization at country level. So, for example, we deregularize and ensure that, for example, companies that are coming to our countries do not need to comply with a lot of laws and rules, for example, around environmental protection. But it's also, other challenges. For example, we are saying countries also lowering taxes, to negligible levels, including granting long tax holidays. Last week, we were talking with some parliamentarians, and we were looking at some concessions that the country has signed, where they are giving away land for $5 per hectare for 50 years. So $5 per hectare for 50 years. No consideration for the appreciation, in that land over that period of 50 years. So we have operated under, that fallacy that let's lower our taxes, let's deregularize, and in that process, we will attract more investors. And then we will say, if we don't do it, then the next country will still do it. So if Kenya doesn't do it, Rwanda will do it. And if Kenya is not doing it, let Tanzania. Tanzania is doing it. So, for example, Tanzania, Zanzibar now granting 10-year tax holidays for any company that is investing in digital services, and they're all moving to Zanzibar for the good weather, for the white sand, and the favorable tax regime that they are getting there. And then Kenya looks at that and says, companies that are working in Nairobi are now leaving for Zanzibar, so let's do the same. So you realize that then we find ourselves competing with each other, and it becomes impossible to seal the loopholes through which we are losing a much needed revenue at a country level. Let's look at the case of Zambia and, look at it from the context of, as they grant incentives to attract FDI, how much are they getting vis-a-vis how much they're losing? And I took some statistics from 2022, and through that year, Zambia had lost about 829 million to illicit financial flows, which are mostly related to the activities of multinationals, which obviously are investing in that country because they think they would say they have a favorable environment to invest in the country. Things like incentives, land, free economic zones, no capital restrictions, no restrictions on the movement of capital outside of that country. And in that year, they attracted only 116 million in terms of FDI, but lost 829 million. In fact, there are statistics now that are showing that for every dollar that is invested in Africa, we are losing about 10 times more that dollar. So we must consider that even as we are talking about the biggest challenges in addressing IFFs is, we must deconstruct the argument that for a country to develop, we must get FDI. And for us to get that FDI, we must offer lower taxes. The other challenge as we draw close to the end is the evolving nature of IFFs. Across the continent today, only 2 countries that I know are really trying to address themselves to the challenges of taxing the digital sector. All other countries are struggling, and even the 2 that are trying are also struggling with this big question of how do we address the challenges of taxing the digital sector, because it is one of the areas through which we are losing a lot of revenue through IFFs. And I know very well that you know that what we call the digital sector is actually not a monolith that we can describe, but rather, you know, a monster of many tentacles. So it's the digital currencies that we see. It's the digital platforms that people are using for purposes of booking services. It's also about the streaming services that are monetized, like Netflix. And, you know, they do not have physical presence in our countries. They are still selling services to us. In fact, if it were possible for me to ask you to raise your hands if you have used either of these platforms, I think the overwhelming majority of us have used this platform. You know, we pay with your card. You know, you renew your subscription. And is the government able to tax that instant? Very difficult. Is the government aware of that transaction? Maybe, maybe not. Is that transaction even going to the country where this entity that we know as Airbnb or Booking.com is registered, or even Facebook? Is the revenue really going to that particular country, or is it routed through numerous subsidiaries? We are now even seeing the emergence of transactions that are paid through digital currency. The transaction happens and it's paid in digital currency. How shall we address ourselves to that? We are also seeing, you know, the emergence of services that are traded online fully. So everything happens online, and the government has no way of tracking that transaction. It's not like the money will come into a bank account where the government can levy any tax and be able to freeze your account if you're not paying that tax. Actually, most of last week, African countries led by the AU had this big conference where they were talking about the challenges of taxing the digital sector across Africa. It remains a big concern, not just for Africa, but the world out there, because every single day there is the emergence of new technology. Even before you know, the ink on the pen can dry, we face the next challenge of what, you know, we are seeing as the emergence of, for example, AI, and new AI is popping up every day. And therefore, the need for countries to really think through about how, you know, the emergence of the digital sector is going to affect, you know, the fight against IFF, the fight against crime. You know, the ability of countries to mobilize revenue still remains a big issue. I think the other challenge as we draw to a close, you know, is the challenge of taxing multinationals. And you know very well that what we consider multinationals are usually entities that have a complicated web of registration, a complicated web of ownership, a complicated web of subsidiaries, a complicated web of, you know, even domicile, where that company or their subsidiaries are domiciled, working in, earning revenue, transferring their revenue to, becomes, you know, a huge challenge for everyone. And I gave this realistic example for everyone to just reflect upon how just one company that is only working on a simple thing like the trade of sugar, the challenge of you know, just sugar, you know, a simple thing, a sugar that is used, for example, in our homes daily. It is also used in making soft drinks, and just this complicated web of just one company that is, doing this. And you can think about numerous other companies that are doing numerous other things. And this has remained a big challenge for the world over. In fact, most international tax conversations are dominated by conversations about taxing the digital sector and the taxation of multinationals, because they are always ahead of the game when it comes to ensuring that their investors get the most out of their investment. They are able to ensure that they will invest with the lower risk of how much tax they are going to pay. And even the structuring is structured in a way that they make sure that they make the most profit out of their investments. Last one, challenge. I know this is something that is top of our heads all the time. Is how do we tax the wealthy? How do we tax what we can consider not millionaires but billionaires? And these are usually people that we can consider either politically exposed persons, who are usually, the decision makers in our countries, but also by virtue of their influence in political circles, then they will usually have a lot of money within, they will usually be among the wealthiest within that particular country. How do you come up with a law or a regime to tax such people? How do you tax their property? How do you tax their wealth? And what influence do the wealthy have on our tax systems, from day to day? And you know very well that this has led to, an emergence of a class of people who are so wealthy that they are hard to tax. And this is an emerging problem, across Africa, that the taxation of the wealthy is becoming harder and more complicated because they do not have a pay slip, most of them, that we can be able to declare as income. They will have diversified portfolios of businesses. They will be, even how they hold their businesses, they will get the best tax advice on that. And, this is an emerging challenge. It's a huge issue for us. And therefore, in conclusion, what we must do is that we must ensure that for our countries, in terms of tackling IFFs, we must see all these as important factors that we must consider in our push for how we fight IFFs. Asimo, I want to pause here so that we can be able to continue. Thank you.
Thank you very much, Sakayo. Thank you so much. What I found interesting in our brother Kayo's presentation is he agreed with the previous presentation from Mr. Chikova that as Africans we are losing more through these IFFs than we are gaining through either foreign direct investment or aid. And I find this quite interesting, like when they use the example of Zambia losing all the way up to 829 million, but only gaining 116 million. This is clearly not a fair equation. Now, we have to realize that there's a question that still remains unanswered as what is the role of lawyers? Most of you attending are lawyers, belonging somewhere, but why we are targeting lawyers is because of the crucial role that they play in structuring financial transactions. Some lawyers are actually aiding these IFFs, while some others are in the struggle of fighting them. And this was clearly pointed out by Brother Kairu when he said that sometimes we have capacity, but it is deployed in the wrong areas, or even that capacity is working for the competition. We find that's quite interesting. So now I'll go back asking each panelist, and in their view after the presentation they have made, what do they think that the role the lawyers, especially now in the East African law society, What do you think the lawyers can do to help tackle these IFFs? What is that special thing that as lawyers we can focus on and fight these IFFs? So I will start with Ruth.
Okay, so first of all, one of the issues that I see is that I work with transfer pricing now, and what I see is that there's limited knowledge for the lawyers, especially with regard to transfer pricing and international tax generally. And because the biggest percentage of trade now is between related parties, so we see that if you don't have an understanding of transfer pricing or generally international tax rules, then you are not able to engage in these conversations. Or if you are with the Revenue Authority or even the Ministry of Finance, then you may not be in a better position to design policies and laws that will help to counter IFFs. So we need a lot of training just so that we are able to counter these. We'll leave that. Then I'll leave the rest to other panelists to discuss.
Thank you very much, Ruth. Ruth points out the need to conduct capacity building for the lawyers. You can work on your capacity so that you can be able to counter the ones who are enabling these IFFs. And clearly, when you look at now, like the example of Zambia, it was given by my brother Kairu, if a country is losing 800 million and getting 100 million, clearly the capacity of those that are playing for the competition is very high. So I will now turn to my brother Ranga. You can also give us your view. What do you think lawyers can do to be able to deal with this problem?
Okay, thanks, Asimo. Just to mention that I am not a lawyer, but my friends in the office, they prefer to call me a bush lawyer, simply because, I'm in the environment of lawyers at Pan-African Lawyers Union. Yeah, so my thinking is that the first thing is lawyers, they need to understand that they do play a pivotal role when it comes to development of our continent. And some of the roles that they play, they actually facilitate illicit financial flows. So just like what the previous speaker said, it's important that the legal profession, they do have a profound understanding of illicit financial flows so that they are also in a position to understand, to say, whatever role that they are playing, to what extent is it contributing to illicit financial flows or to combating illicit financial flows. I think organizations such as PALU, ELS, etc., they do have some trainings, on these topics so that lawyers are able to understand and locate themselves in the development matrix. Then, secondly, lawyers, they need to do research and analysis on the laws that we have, because when we talk about tax avoidance, it's something that is legal, but it's it's allowed in the law. So once lawyers, have the analysis of the laws, they identify the gaps that are being used by, multinational corporations to avoid paying tax, then they can work with various stakeholders to ensure that those gaps within the laws are sealed. Then when it comes to combating illicit financial flows, I think it's important to have a movement that can also exert pressure on our governments to reform our laws so that we combat illicit financial flows. And lawyers here, they play an important role, especially when it comes to providing capacity, because some of these laws, some of these issues, lawyers are involved. Of course, we do have other professions that are involved. So it's important for lawyers to provide the capacity to citizens so that when citizens engage with their national governments on issues pertaining to combating illicit financial flows, citizens, they will engage from a point of knowledge. I think I can stop here. Thanks.
Thank you very much, Mr. Chikova. Thank you very much for pointing out the need to exert pressure on our governments and to have profound understanding of how illicit financial flows work. So now I will turn to my brother Francis Cairo. In your presentation, you pointed out this important factor that we have people we have capacity, but it is in the wrong areas. We have capacity working for the competition. Also, we have capacity that is misplaced. Like instead of placing those excellent persons in the revenue authorities, you find them like the Ministry of Finance, Mr. General's office. So, in your view, as a practitioner, what do you think lawyers can do, and not just the ones working in government, but generally those in private practice and those in private practice and those working for the society organizations? What do you think lawyers can do to be able to tackle the problem of reducing illicit financial flows so that we can be able to reduce reliance on?
Thank you for that. I think just in addition to what my colleagues are saying, it would be important for lawyers, regardless of where they find themselves, to consider that IFFs require enablers, and lawyers, accountants, real estate agents, insurance agents, we have been considered as enablers, for many years. In fact, you will know that some countries today are facing what we call, a FATF gray listing because of the inability of that country to have, regulations on, the work of enablers, and its regulations related to, for example, lawyers being able to self-regulate on matters of anti-money laundering, and therefore we have faced a gray listing, in most countries because of that. And therefore, lawyers recognizing their role as enablers, and once we recognize our role, then we start playing, a better role in self-regulation, coming up with procedures that help us to, not be the facilitators of what we can consider not illegal but illicit conduct in our countries. I think is very key. I also do agree that we need to continue building specialized capacity for lawyers. You know that we are being told that AI is almost wiping out our jobs. In fact, I was reading an interesting article last week where somebody, created a virtual avatar and requested that virtual avatar to appear on their behalf, in court as defense counsel. So even though AI is almost wiping out our jobs, we must also build specialized capacity in these areas, and ensure that even in the context of, evolving challenges around taxation, around IFFs, we are also building specialized capacity. But additionally, legal reform is required. And it's not just legal reform at a national level. It's also legal reform at, the broader regional and international level. What my colleague mentioned, for example, now that we are developing a new platform on which countries are going to cooperate on tax matters, that we are calling the UN Tax Convention, legal expertise will be required. And therefore, lawyers supporting these broader reform efforts, if it is at a national level, supporting beneficial ownership transparency, supporting the existence of requirements, for example, for companies to report on their activities, in their country and in other countries where they have subsidiaries, what in tax parlance we call country by country reporting, the requirement, for example, on structuring the exchange of information between government agencies. I think those are key legal reform issues, and to the extent that lawyers can support that, I think is going to be very key. I must also add that a lot of what we see happening in IFFs is through commercial activities, which is usually underpinned by contracts. And these contracts often go through the hands of experts. Most of these experts will be the lawyers and the tax experts. And therefore, lawyers being able to leverage their expertise to, help countries and not just countries, but ensuring that the contracts that are signed, in how they are structured, in how they are reviewed, I think it's going to be very key. But as we speak about contracts, let's not forget about double taxation agreements, which are negotiated, signed. Most of the experts in that room will be lawyers, and DTAs have facilitated the loss of revenue for a lot of countries. And being able to have lawyers that support the review of DTAs, the review of contracts, and support for the broader reform, I think is going to be very key. Two final points is about legal education. I think we need to incorporate, some of these lessons in the training for lawyers. I think it is very disadvantageous for us to, get admitted to the bar, and it's only after we get over to this other side that we realize that we missed some very crucial information about what really happens in the world out there, especially on matters of IFFs, and commercial crime, and economic crime. I think it would be very good for our legal training to also include some of these things. And lastly, strategic public litigation. The people that are denying us these resources, one of the ways that we can support is ensuring that we engage in strategic litigation. I have seen some companies that are taken to court for environmental degradation. I've seen some companies taken to court for human rights violations. I'm yet to see any that has been taken to court for tax evasion and the impact that it is having on the lives of people. I've seen workers in South Africa who took their company to court because they say that part of the reason why some of them were laid off is that because the company had engaged in what we call thin capitalization. So they had strategically reduced the amount of money available within that country to the extent that they were now not able to pay workers salaries, and that led to restructuring of the company and some people being laid off. So I would say strategic public litigation is very key. Thank you, and back to you, Asima.
Thank you. Thank you so much, Mr. Cairo. I will also add that we need, as lawyers, to strengthen our anti-money laundering laws and practices, since this is also one of the ways through which we are losing money to illicit financial flows. So now, at this juncture, I also have to remind the attendees that we have shared a link in the chat where you can give us your feedback on this webinar. I would like to open this discussion for questions. I am not seeing any questions in the chat. I'm not seeing any questions in the chat yet. So feel free to text any questions there. Mr. John Yambui, can we have a recording of this session? Yes, please. The recording will be made available after the session is done on YouTube. So back to our discussion about how to tackle illicit financial flows so as to reduce reliance on foreign aid in Africa, what lawyers can do. We have also had from our beloved panelists. Ruth started first when she made a presentation about the common IFFs that we face in Africa and how they affect our resource mobilization as African countries. Then here she talked about she defined the IFFs, tax avoidance, tax evasion, one which is legal, another one which is illegal. And for something to amount an IFF, there must be an element of illegality. But now the definition keeps changing. When the civil society organizations say that's because it is not illegal, does not mean that it is not illicit. And she stated that losing money through these IFFs causes reduced amounts available for development. So if we can close that gap of the amounts lost, it helps a great deal in making more money available for development. After Ruth, we had a presentation from Mr. Rangarila Ichikova on how these common IFFs can be curbed and whether doing so will reduce reliance on foreign aid in Africa. Here, he pointed out the need for political will to be able to curb IFFs, considering that some of the IFFs, like corruption, have a benefit for the kind of positions we have in Africa. He talked about the unsustainability and unreliability of aid and stated that these tax incentives that we have to attract investment are not benefiting us as Africans. So he pointed out the need to do a cost-benefit analysis of the tax incentives, like tax holidays that we provide. After that, we attended the presentation from Mr. Francis Kairu on how these key challenges that we involved in curbing IFFs can be addressed. He presented about a number of challenges, and he said that one of the challenges was mischaracterization of the problem, which is responsible for us being where we are. He stated that there is a lot that is being lost through the financial economic ways, like up to 65%. And there's very little that we are losing through corruption, but nonetheless, we need to work together as Africans to reduce them further. Then he pointed out the need for countries and the individual authorities within the countries to work together, share information, do a conducted risk assessment, risk profiling, so as to be able to curb these IFFs. I want to check if there's any questions in the chat. Still none. Okay, any parting shots? I see we have about 30 minutes left. I will start with Ruth. Hey Ruth, maybe she's not there. Mr. Ranga, any parting shots?
Okay, thanks, Asime. I'm just gonna use the old saying that says Rome was not built in one day. I think when these issues of these financial flows came to the public, I think there was little understanding on these issues, and there was little hope to say, can we really tackle illicit financial flows? But I think from the events that has happened, even since the production of the high-level panel report on IFFs, we have seen that there has been some progress in terms of combating illicit financial flows. So as lawyers, me in courts, I think there's a role that we can play, and we have already discussed this. Yeah, so let's not give up, and let's continue to encourage our governments to implement laws that can combat illicit financial flows. And as lawyers, we need to understand that we do have a role that we play when it comes to development of our countries. Thanks.
Thank you very much. Thank you very much for the encouraging words. Even though it looks dim, we should not give up. Thank you for that. Mr. Cairo, any parting shots?
Thank you. I know when we say IFFs, it looks like it's a topic that is far removed from our realities, but I think it would be good to, reflect upon the effects that we have seen for the lack of, proper revenue across Africa. I know that if you come from a country like mine, issues of schools, either not having sufficient facilities or not having sufficient teachers or being in a dilapidated state is something that is, a daily reality. The issue of broken down infrastructure is also a common reality for us. Poverty still remains, a major concern for all of us. The inability of government to provide critical services, for example, medical care, and this is for everyone, whether it's for children who need postnatal services, or for cancer patients, or for those that need proper dialysis machines. This may sound, like it is not in any way connected to what we were discussing today, but it is important to contextualize it from that perspective, that indeed, most of not just the developmental challenges that we see, but also the ability of government to provide critical public services is related to the lack of resources. So what we even call the national cake today is something that is very deficient. We will not be able to overcome the issue of domestic resource mobilization if we do not tackle IFS. And therefore, it will remain a big challenge for all of us. And the more that countries do not do something quickly about the problems that we face, the more compounded the problems will become, the more complicated it continues to be, the more over-reliant that we will be on the help that we can get from others, and the more indebted we become to them. It becomes like a cyclical thing that, we do not have the resources, so we borrow even more, or we get even more aid. It comes with even more conditions, and then we tax our people even more to be able to repay the debt, and we see collapse in our societies. And therefore, though we call it IFFs, in a fancy word, and we talk about tax evasion, we talk about base erosion, profit shifting. It's just a complicated way of saying we need to do a little bit more because it matters to us and our livelihoods every day. Thank you, and enjoy your afternoon, everyone.
Thank you very much, Mr. Cairo. Thank you very much for pointing out that we shall not be able to overcome the issue of domestic resource mobilization until we tackle the issue of illicit financial flows. This is very important. I want to remind you all that we have a link for your feedback, a little box in the chat. Please follow the link and let us know how the webinar is going. I will give Ruth a final chance for parting.
Okay, my parting shots, especially since we are lawyers, or maybe, well, it's about the talk is about the role of lawyers. If we look at a lot of the tax litigation, there's a lot of money that countries have been able to recover through litigation. And for multinationals, some of the biggest cases have been transfer pricing cases. If you look at, for example, in the US, there's a Coca-Cola case recently. If you look at the Apple state aid case, about 13 billion euros involved, even though it may not be classified as illicit financial flows because it was state aid, but we can see that it's a lot of money. And as lawyers, we really need to, lawyers in Africa, we need to build capacity to be able to, first of all, advise our clients on the best way to structure transactions, but also having our countries in mind, because like Francis mentioned, a lot of these transactions, the IFFs, lawyers are involved, but sometimes it's not that it may not be intentional, especially for transfer pricing. For example, sometimes it's just limited knowledge on how best to deal with the transfer pricing, and this limited knowledge is both with the tax authorities and the lawyers outside the tax authority. And tax authorities are now investing heavily in skilling their international tax departments, but we may not see that a lot from the lawyers in private practice, the ones that are going to uh, uh, defend clients in court. And sometimes when you look at a case and you look at the decision and you just wish the judge or whatever judicial officer had better knowledge on international tax issues. So really capacity building should be at the top for a lot of for the lawyers, but also the judiciary in our countries. So that's it.
Thank you so much, Ruth. Thank you so much for pointing out the need to have capacity building and emphasizing that we can be able to recover some of these monies. Like it has already been done through litigation, but we are only able to compete if our capacities are enhanced. Someone talked about the contracts and double taxation agreements that are drafted by us as lawyers for multinationals. And I like the fact that Ruth has pointed out we need to think about our countries. Okay, if we are doing this kind of work, let's not only, I know we always do it to the clients, but we also come from societies where we also need to think about our countries. Let us have our homesteads at the back of our mind. Thank you so much. So without any questions, I will now hand over to Gabriel to give a vote of thanks so that we can close this. Thank you so much.
Thank you so much, Mr. Mugumya, for that very wonderful session that you have just moderated, and for keeping time and making sure that this session is both lively and informative to the participants. Colleagues, ladies and gentlemen, on behalf of the East Africa Law Society, I would like to send a vote of thanks to our esteemed panelists, Mr. Rangarai Chikova, Ms. Ruth Mirembe, and Mr. Francis Kairu, for taking off time this afternoon and for accepting to speak at our capacity building session. We have been blessed and now informed on illicit financial flows and what our role is as lawyers in curbing this down. So going forward, we will share a recording of this session on your various email addresses, and we'll also be sharing out a brief report of the same so that you can keep reflecting on this very important discussion just held. With that said, we'd like to thank our partners, Youth for Tax Justice Network, represented by Mr. Asimwe Mugumya, for accepting to build capacity of the lawyers this afternoon. We look forward to having a time where we have a physical conversation on this particular subject matter, and with the hopes of having an in-depth training now that we know we have a faculty of experts who can speak to the subject. That's it, ladies and gentlemen. This Thursday, we'll be discussing AI and the law, and we have a very interesting session organized in partnership with Microsoft. So you want to register for that session as soon as you see the flyer move out, and we hope to see you on Thursday. You stay blessed and be safe. Goodbye from my end, unless Mr. Mugumya has anything to add from the Youth for Tax Justice Network.
Thank you so much. The only thing we require is that you follow the link that has been posted in the chats and give us your feedback. This feedback is important to us. It helps us to analyze whether you have understood what we've been discussing, whether there are areas for improvements. And the saying is that the biggest room is the room for improvements. Please be honest in your feedback, and thank you very much for sparing time to come and spend this afternoon with us as we discuss illicit financial flows, how we can reduce them, and whether reducing them will lead to reduced reliance on foreign aid in Africa, and also what is the role of the lawyers. I am only seeing one comment in the chat from Rahel saying that thank you so much for the insightful session. You're most welcome, Rahel. So, if there's no any questions, yes, Mr. Girma Bayu also saying thank you. We appreciate. Without any, if there's no any questions, we shall now close the session. Please copy the link and give us your honest feedback. Thank you so much for your time. Stay blessed. Have a nice afternoon.
Thank you all. Goodbye and stay blessed. Goodbye.